Right now, the United States government is sitting on more than 8,000 tons of pure gold. At today's market price, that metal is worth over $1 trillion. Yet if you open the official Treasury books, the same gold is listed at just 11 billion. I thought that number had to be a mistake, so I kept digging. What I found is that America is still pricing its entire gold stockpile the exact same way it did in 1973, $42.22 an ounce. Not approximately. Exactly. That single frozen number creates a gap so large it almost doesn't feel real. How does the richest country on earth keep valuing the largest official gold reserve in the world at a price last set when a new car cost $3,000? I expected a simple clerical explanation. What I found instead was a story that begins with a system that was supposed to last forever. After the Second World War, the world's currencies were locked to the dollar, and the dollar was locked to gold at $35 an ounce. As long as foreign governments believed America would hand over the metal whenever they asked, the arrangement held. By the late 1960s, they stopped believing it. Central banks began demanding gold. American reserves started draining faster than almost anyone admitted in public. On a Sunday night in August 1971, the president appeared on television and closed the gold window. Foreign governments could no longer exchange dollars for metal. The link that had held the global monetary system together for a generation was cut in a single broadcast. Most people assumed that was the end of the story. It wasn't. The United States still needed an official price for the gold it continued to hold. In 1972, Congress raised the statutory rate from $35 to $38. Then, in September 1973, a quiet law pushed it one last time to $42.02 per fine troy ounce. That number was written into federal statute. And then the lawmakers stopped. I kept reading, expecting the price to be updated later. It never was. Market gold did not stop. It climbed to $850 by 1980. It fell. It rose again. It crossed 1,000, 2,000, 3,000, and now more than 4,000. The official price never moved. Today, the Treasury still multiplies its 261.5 million ounces by that same 1973 figure and reports roughly $11 billion. The market multiplies the same ounces and arrives at more than $1 trillion. I thought there had to be a technical reason the number was forced to stay frozen. What I found was simpler, and in some ways more unsettling. Changing it requires an act of Congress. For more than 50 years, neither party has chosen to open that door. Marking the gold to market would create an enormous paper gain overnight. In theory, the Treasury could issue new gold certificates to the Federal Reserve and watch hundreds of billions appear in its account without collecting a single extra tax or selling a single bar. Yet successive administrations have declined. Some officials say a floating market price would make the government's balance sheet swing too wildly. Others worry that treating the gold as if it were about to be sold would send the wrong signal about the dollar. Most simply prefer the quiet of an old number that no longer has practical consequences. The metal itself is still there. Roughly 147 million ounces sit at Fort Knox. Tens of millions more rest at West Point and Denver. A smaller portion is held at the Federal Reserve Bank of New York. The bars are real. The audits, though limited, confirm their presence. What is not real is the price stamped on the books. That frozen valuation has consequences almost nobody talks about. The Federal Reserve holds gold certificates issued by the Treasury. Those certificates are valued at the same statutory price. By law, their total cannot exceed the book value of the gold, so the government's ability to monetize any more of its own metal is capped at a figure that became meaningless decades ago. In recent years, as gold prices climbed and the national debt passed $37 trillion, the idea of revaluation has quietly returned. Some lawmakers have suggested marking the reserves closer to market and using the accounting gain for fiscal purposes. Treasury officials have publicly dismissed the notion. The law remains unchanged. I kept searching for the deeper reason this contradiction has been allowed to stand for half a century. What I found is larger than one accounting entry. When America abandoned gold convertibility, it did not abandon the gold. It simply stopped treating the metal as the foundation of its currency. The statutory price became a museum piece kept on the books out of institutional inertia rather than economic necessity. Yet the metal never lost its power to measure the dollar. Every time gold rises in dollar terms, the purchasing power of the currency falls relative to a scarce physical asset. The official books ignore that movement. The market does not. For most people, the discrepancy is invisible. For central banks and large investors, it is a quiet signal. America holds the largest official gold reserves on Earth, yet chooses to value them at a price last adjusted before most of us were born. The choice is deliberate. Updating the number would force a conversation about what the dollar is actually backed by, what role gold still plays in a world of floating currencies, and whether a government sitting on a trillion-dollar asset should continue pretending it is worth $11 billion. As long as the law stays frozen, the answer remains the same. America still prices its gold like it's 1973, because, in the deepest sense, it has never fully decided what to do with the monetary order that ended that year. The bars remain, the price on the books remains, and the gap between the two continues to widen, a silent reminder that even the most powerful financial system in history still carries the unfinished business of the gold standard inside its own ledgers. The next time someone tells you money is only what a government says it is, remember this: the United States owns more gold than any other nation on Earth, values it at a price frozen before most of us were born, and has spent more than 50 years choosing not to look at the difference.